All right, let's see. Bob, welcome back. Fred, loud and clear. All right, thank you. Then let's start. Welcome to Tradespoon and Yellow Tile. My name is Vlad Karpel. I'm CEO and founder of both companies. And today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, tapping first. Always want to welcome new subscribers. This is my brief bio. I was executive vice president and head of technology at Options Express from its inception through 2007. Started Tradespoon in 2012, started Yellow Tunnel in 2018. I want to take this opportunity to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing that for over 15 years. Mentoring and teaching subscribers how to trade stock and options. Disclosures are very important. Please read them. If you're new to trading stock and options, I encourage you to visit the link on your screen. You can always pause the screen. To understand the risk associated with trading stock and options, the optionscreening.com. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm here to show you what I do in my own account, based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or equal past performance. All right, we talked about trading psychology yesterday. I'm not going to repeat all the concepts again. There's a first step in emotional intelligence is self-awareness, right? In trading, self-awareness is extremely important. Why? Digging deeper, right? You have this exercise, you ask you why, you answer it, and then you say why to the answer, and you ask it again, like peel, onion until you get to the bottom of it. Right, these are very powerful exercises to help you understand why you're getting into a trade. Right, is this to pay a mortgage? Is this, because you didn't get enough sleep or you're bored? Right, certain reasons are not good to trade. Right, the goal of trading is to be more or less mechanical. Right, where it's a repeatable process. You can document it. You can give it to your, children, you can give it to your friends, and they can just go in and repeat the process over and over again, right? So it requires trading plan, it requires journal, right? So I encourage you to keep a journal. I encourage you to have a trading plan. In your trading plan, some of the things that we've covered is cash, right? I propose if you think we can avoid the recession, 30% of your portfolio should be in cash. Right, you're bullish on the market. If you think we are heading into recession sooner or later, then 50% of your portfolio is in cash, right? You're more bearish on the market. So cash is extremely important. Second is portfolio drawdown, right? The idea of having only if you start trading or you're new to trading, you still don't feel 100% confident, 100% disciplined, right? If you don't feel like you're 100% disciplined and confident, I propose to only have 4 positions and not risk more than 2.5% of account value per position, right? This is a very important concept, right? Very important concept. How do you determine 2.5%? Again, this negative visualization exercises, right? We briefly broke through year-to-date high, posted new high last week. We were trading above 420 for a few days. And then, on the idea that that ceiling can be avoided and we're going to reach an agreement, and everybody was excited. And then as we're approaching the deadline and it seems like progress not enough for everybody, we did have a pretty sharp pullback yesterday, and looks like we're still down today 0.5%. So in terms of support and resistance, again, this is now a main overhead resistance, right? I would say 418, the previous breakout, right, is your resistance number 1, right? I mean, this is from 420 to 418. So this is your resistance number 1, right? For market to continue going higher, we first have to break above 420, right? This marginal breakout, false breakout, basically. So that's your resistance number 1 to get to this upper trend, right, which is around 427, 430 at this point. All right, so that's your resistance number one. Your support, we spent first 2 weeks, right? Or at least not first 2 weeks, but this time period about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 sessions, right? So about 2 weeks, we spent it around 408, right? So 408 is your resistance number two, right? Sorry, support number two, support number one, sorry. And we're basically, for all practical purposes, are testing this level, right? This is 4, so somewhere 408, right? We're down to 412. I mean, short-term market is oversold, but we're probably gonna retest 408 sooner or later, right? Unless there is some news about that ceiling, right? I'm gonna make an assumption if they do reach an agreement on that ceiling, today or tomorrow, then market will rebound because it is oversold. If they don't, then passive list resistance is to continue going lower and potentially test support number one and support number two. Right. So if you're in soft landing, right, if you think we can avoid the recession, market pull back, right, from 420 to 412, about 2%, right? Maybe you want to wait till 410, 3%, and you want to go long, right? So if you go long around 412, 410, right, if this is the buy, because you think we're going to break through the overhead resistance, how many shares do you buy, right? And what is your stop loss? So to answer the question of how many shares, right away you have to ask yourself, well, where would I get out? Where is the kind of a red line in the sand? Right now, the line in the sand between bulls and bears, I would say 50-day moving average, right? We've tested it in March, end of March, we were unable to break it. We've tested end of April, we tested in beginning of May. It's a 50-day moving average. It's a classical setup, right? Soft landing narrative is probably going to be in trouble if we break below 50-day moving average, right? So 404 is your stop loss, right? So then right away, how many shares? If I'm buying at 410 and I'm exiting, let's say, 400, right? 402, roughly 10 points, right? So I would say that this is roughly 412, 402, right? 10 points. Yeah, so that's the line in the sand. So now I have to figure out how many shares. If my stop loss is 10 points, because I'm thinking about days or weeks, right? We haven't reached that level until end of April, almost a month. We haven't broke through this level. It will be May low, important level. We're not that far away from that, only within 2%. So 10 points. How many shares can I buy? I propose on a $10,000 account, which is average account at Tradespoon and Yellow Tunnel. You can buy 25 shares, right? So if you buy 25 shares and 10 points down, then it's $250, right? $10,000, 2.5%. So this is the first step in becoming, mechanical, disciplined trader. You always go through this calculation, you write it down in the journal, and you always say, okay, how much cash do I have in my account? How many positions? What my position size? Most common mistakes we all make, if the market, let's say, does break through 50-day moving average, right away you try to convince yourself, well, 200-day moving average is much better support, right? And and you're waiting for 395, let's say, which is fine, as long as you didn't buy 25 shares. Then for that reason you buy, and then not holds, then you buy another 12 shares when it reaches this. Mistake would be to buy 25 shares right now, right? And then if we do breach through 50-day moving average, which is actually not 50-day moving average anymore, we're right now getting close, it's going to be lower. But anyway, if we breach in the May low, then, you wait for 200-day moving average, all right? But then the problem is if we do reach 200-day moving average, now you're down more than $250. So this is the classical mistake. Everybody does it, right? Including myself. The goal is to be self-aware, realizing that, and at least grade yourself, right? I put down religiously every single trade I make. I put it in an Excel spreadsheet. I have a journal, and I put my comments, and then I grade myself. I would give myself A or B if I follow my trading plan, and based on the outcome, or I follow C or D if I don't follow my process, don't follow my trading plan, and I chase the outcome. Okay. Some of the few other things that you could put in trading plan, like usually wait for 2 to 3 days to confirm the trend change, right? Right now, I wouldn't be too bearish, right? Okay, we have 1 day pullback, 2 days pullback. That doesn't mean tomorrow we're not going to have an agreement and market rebounds. If the market is down 2 to 3 days in a row and breaking important support resistance levels, okay, then the trend is changing. But right now the trend is bullish, right? So that could be a rule. Liquidity, right? If you're trading options, you want it to have high open interest, you want to have volume, you want to have tight bid and ask spread, right? Unless you use it as a stock substitution, right? Then I guess it's not. But if you're trading options, you want liquidity, right? That could be part of your trading plan. In the trading plan, I encourage everybody to give yourself more time, right? If you think market is going to break down in June, then by September, give yourself more time. Give yourself more space. If you think 50-day moving average is going to hold, assume 200-day moving average is going to hold, and then that will force you to decrease your position size. ABC pattern, some of the psychology, so those are all things that you can put in your trading plan, right? And as you learn, as you get more confident, and certain setups you don't like, let's say you don't like to trade Bitcoin, you don't like to trade illiquid options, you don't like to trade stocks that don't have volume, under 2 million, you would add that to your trading plan, right? And kind of make sure that before you enter a trade, you have a checklist. All right, any questions? Faust, good morning. To re-enter hedges, and that's that probably will happen. Fred, so Fred's point, question is, they always reach that ceiling agreement sooner or later. Maybe you don't need as many hedges, right? I didn't put additional hedges for that ceiling, right? I just think market is extremely overbought. I don't know what the catalyst for the market to go higher, right? Everybody said, well, that ceiling, but nothing, situation hasn't changed in terms of microeconomic conditions, right? So I think personally, that ceiling, I know they will reach an agreement, but I think it'll be still a trigger for a pullback. And maybe if it's not that, then something, because we are approaching June, right? May is almost over, and volume is going to dry out, right? And you're going to have you can already see volatility speaking up, basically unknown news, right? McCarthy walked away, McCarthy walked in, McCarthy walked away. So any news in the market, and there are plenty, right? China, Taiwan, China, economic conditions, it's kind of nobody talks about it, but China is changing as a country, right? From, they are more pro totalitarian authoritative government, right? And they want to retaliate, because West is pushing them around. They want to be able to retaliate, right? And how do they retaliate? They get this new guy who is responsible for overseeing U.S. companies, right, and West companies, for espionage, for anything like that, right? So, money are floating out of China, right? The unemployment among, 20-year-old is at 20%, right? So they have a lot of problems. It's kind of on the background. Nobody really talks about this, but you can see it in the price action of Chinese companies, right? They're knocking on the door of December lows, right? This is pre-pandemic, when they turn off the zero COVID policy. And now they have a new wave of COVID, so you might not have an opinion on what's going on in politics, but you can definitely see in the stock prices that it's a descending triangle, and it's a problem, right? So second largest economy, and this was the main narrative behind, bull market from starting October going to December now. Now we have kind of this AI revolution. I would also watch stocks like Apple, right? So Apple, day 1, day 2, day 3. So as long as we're trading lower, and we're knocking on the door of the support level, and we're trading below this gap, that's also kind of a setup where stocks like Apple and Microsoft might start breaking down as well. So those are what supported the market up to this up to today. All right, meanwhile, we have calls. Right, we talked about calls is up 15%. We have to watch ADI is down 10%. Right, so that's the semiconductor. Palo Alto is up 5%, and VFC is up 0.5%. KRE is down, Spider's down 0.5%, Dow Jones down 40 basis points. So semiconductors are leading the move to the downside, and technology. So for now, I would watch, again, I would zoom out into 1 hour. And I would watch, well, we're basically retesting this level, right? This is May 5th low, right? We've been through this level many times, we briefly broke through it, but we did hold it for a few weeks. So 409, 4010 is your line in the sand, not line in the sand, but this next level of support if you're thinking about days and weeks, right? Questions? Thank you, John. Thankful. How often do you refer back to your comments? Bill, sorry, what does that mean? How often do I refer back to my comments? Like, how often do I read journal and my comments in the journal? I do it, on a daily basis. I always go back and read my comments in my journal to remind me, right? Because my memory is not that great. Nor do I know how I felt when I placed that trade. So I always go back and kind of review it. All right. Any other questions? All right, so let's watch calls, right? I sold call, right? 20. Let's look at the calls. So I sold 23.5 call, and we are trading higher. So now I have to, right now the trade is, let's look at the quotes. 23.5, so it's $1 away. It's about 5% away, so I still have room, right? But they did beat on top line and bottom line, improve their margins. So the trade is going against me, right? So now I have to decide whether I want to, close this trade for a loss, wait for a pullback, right? Those are the choices, or hedge my position, right? Hedge my position. So usually I wait, you want to wait 10 to 15 minutes and see if, stock is going to pull back or if it's going to continue going higher. So, 5 minutes, 10 minutes, 15 minutes. If in 15 minutes it's still not going higher, right? Then I would not buy the stocks. If it does continue to go high and approaches the 23.5 strike price, then I would hedge. So for now, I'm just waiting. We'll see what happens. Let's see. Meanwhile, spiders are down 0.5%. So retailers, calls, I think ANF, right? Abercrombie & Fitch is up 24%, right? Better than expected. And Urban Outfitters is up 18%, right? So these smaller retailer companies are better than expected, right? Better than expected. Let's watch XRT as well. Yeah, so we're heading higher. Let's see. So you're 6 minutes into it. Maybe. XOP looks like it's turning around, my opinion. Let's see. I mean, you can definitely do see the support. So, 2 weeks in a row, higher highs. We are facing this downtrend, so I would wait before going long. I would wait for breakout above this level. But you do have a well-defined stop level, right? 115. So you have maybe 11 points to the downside. I would wait for break above this line, this downtrend. Maybe let it clear 130. And then potentially you can go to 140, 141. So it's kind of a 50-50. Right now, it's still in downtrend. 2 weeks in a row, this is good because I think that gives you a good support, at least short term. So, but I would wait for a break above 130. Once we're above 130, then and above this line, then you can go long and see if you can squeeze to 140, maybe even 145. But again, it's very sensitive to interest rates, right? And dollar, right? So dollar is stubbornly high, right? 3 weeks in a row, we're making higher highs, higher lows. So that's bearish for oil. Yield is higher, right? So that's bullish. So you have kind of the opposite forces. But I would watch the yield, I don't know how much longer it's going to rise. I mean, there's one theory that after that ceiling, that yield is going to rise a lot because liquidity is going to dry out because they're going to sell all these treasuries to raise cash. So we'll see. All right, so now we have 2 candlesticks. That's 5 minutes. Okay, so it looks like we're trading lower. Yeah, so it's now going lower. So I would not want to buy a stock now. So that's kind of important rule, right? Candlestick 1, 2, 3, right? You don't have a breakout until you have some kind of a support. Now that it's going lower, most likely this is the top, right? And we're not going to break this top. So at this point, I would wait on that short call. BFC is turning negative. So now candlestick 3 almost is done, right? Candlestick 1, 5 minutes, candlestick 2, candlestick 3, 5, you know, and we're not making higher, we're going lower. So then this means that most likely this is the top. I mean, we may or may not revisit this top today, but you know, that's the top. So let's try to, how much is it trading at? The option. So I'm going to try to close it for 5 cents. It's trading at 14 cents right now. 23.5. Okay. So I'm going to try to close it for 5 cents. All right. Any other questions? Yeah, Bill, journal comments I do read, especially these trades, right? Like calls, right? I would document this trade, what happens, what did I do today? Because in 3 months, I'm going to do this calls trade again, right? When the earnings are going to approach, right? And that's, or if I have a similar setup, right? Let's say, I don't know who's announcing, Marvell, right? Marvell does earnings, right? I'm looking at, you know, how the ADI behave, right? Same kind of thing, right? You reach the bottom, you wait 5 minutes, 10 minutes, 15, the bottom, right? So it's not accelerating, then most likely, you know, this is the support. So I would document this, right? It was a good idea to wait, you know, 3 candlesticks, right? So if on 3 candlesticks, I don't see acceleration to the upside, that most likely this is the top, right? It doesn't have to be, but most likely this is where I would say kind of the line in the sand. If we start breaking above this level, you know, then there's this wave C is coming. But now most likely, you know, I mean, we'll find some support, but you know, it's going to most likely just trade in the range. Most likely just trade in the range. All right, next. Tom. Right, so TAP and TLT still open. Let's look at TAP. So TAP is an issue, right? It's broke through the support, so which is bearish. It's almost closed the gap, and XLP started to pull back, right? This was one of the strongest sector, and it just kind of elevator up, elevator down, basically approaching 200-day moving average. So it's extremely oversold, right? It's below 50, it's below 200-day moving average. It's probably a little bit overdone at this point. So I would wait for the bounce in XLP and TAP, right? Because they are overdone in their pullback. So for now, I still hold it, but I'm down less than 2.5% on my account value, right? If you're down more than 2.5%, if you calculated that this is your stop loss, and then let's say you didn't do dollar cost average, and at this point you're down more than $250, I would get out of this trade, because you can see spiders are retesting 409, and it's this level may or may not hold, right? We're basically approaching 50-day moving average. I mean, it's a strong support. Market is oversold and should bounce, but it may or may not. So if you're down $250, I would be out. If you're down less, then for now I'm waiting, right? I'm waiting for signs of stabilization. For now it's just kind of elevator down, but at some point, as we are approaching 200-day moving average, I think there will be sign of stabilization. TLT, Treasury, I'm bullish on TLT. I am bullish on TLT. It is oversold, right? It is below 50 bearish price pattern, even though 50-day moving average did cross 200. No, this is 50. Yeah, the red is 50, yellow is 200. So yield is a little bit overdone on the debt ceiling discussion. So it did but it is extremely overbought, right? It's extremely overbought. We went from 3.5 to 4.4, very short period of time. I think that ceiling, whether they will reach an agreement or will not reach an agreement, that will be a trigger for yield to pull back, right? And market to continue decelerating. And one place people gonna start going back to would be treasuries. Peter, good morning. How long to hold? Peter, so you bought UUP, how long to hold? Again, it depends what kind of trader are you, right? I would propose, since you're asking that question, I propose to be more conservative, right? Basically say, 27.53 is my stop loss, right? 27.53 is my stop loss. And so I'm risking at this point $1.30, right? Let's say I have 100 shares on a $10,000 account. It's dollar is overbought. Potentially close half of the position, right? Because I assume this position is profitable now. So maybe you close half of the position with the assumption that it might break through the March high. It's very close to that level, right? Personally, I think dollar is going to continue going higher, but we have to have a recession for that, right? So there are signs of recession, but there's no evidence of recession. So, and the only way if there is a recession, unemployment has to tick up. And right now, unemployment is not ticking up. So the next reading on unemployment would be next week, right? Next week, we're going to have unemployment rate. So if it stays 3.4 or a drop, then dollar is probably going to pull back. if there is an uptick in unemployment, right, maybe 3.7, maybe 4, I don't know, then yes, because the initial jobless claims are ticking higher. At some point, it will translate. It's just, I don't know, is it going to be June, July, September? We have to wait and see. But usually what I do is it's the same analogy that I did Broadcom trade, right? So I bought at 683 and I closed half at 698, right? Because it can continue going higher or it can drop below, right? But, market internals are deteriorating, right? So SMH is down 2%, QQQ is down 0.5%, spiders are down 80 basis. Market internals are deteriorating, and if Broadcom drops below this line 673 and spiders drop below 50-day moving average, then probably, or not 50 but below 405, that would be my signal to get out of Broadcom, right? So maybe I would hold Broadcom till 404, but anything beyond that, that means the bull run is over. It's time to get bearish, right? But as long as we're trading above 404, we're back in the range, right? We've been trading between 404 and 420 now since end of March, right? So April, May, 2 months in a row, we're just trading in this very narrow range. We had a false breakout to the upside. We might have a false breakout to the downside, but we are very range-bound trading. So dollar cost average makes sense, right? Dollar cost average makes sense. Dollar is up, right? Okay, then maybe you need to trim half of the position, right? Kevin, Amazon is strong move up out of the gate. Let's look at Amazon. It's sitting at this, again, key support, right? This is a prior earnings reactionary high. Now it's post-earnings, not post-earnings, but yesterday's reactionary low. This is a line in the sand. So Amazon is bouncing back. How about the other boys and girls? Let's see. Tesla started to move to the downside, down 3%. Google is down 1%, right? This is all ChatGPT, AI. Gap, so that's bearish for the market, right? There's candlestick 1, candlestick 2, gap. I wouldn't panic, but maybe one more candlestick down on Google, and this is maybe the top, and I would get out of the Google. The same thing with Microsoft. They already had a big candlestick. I wouldn't panic yet, but I would watch. I think Apple 170 is kind of the line in the sand. I think once we do drop below that level, you'll start seeing spiders accelerating to the downside. But for now, spiders are able to hold on to this level. Okay, Russell 2000. So okay, let's see if we can close some of these shorter term trade. So right now, Russell 2000 is not. So I'm going to put an order to see if I can close it for $40, half of the position. IWM. And the second half is, let's close it at $1. All right, so let's look at calls again. Is it bouncing back? Not yet. Okay. Not bouncing back. So almost close the gap, right? So this rule, wait for 3 candlestick, is very important, right? Whether it's a 5-minute chart or whether it's 1-week chart, right? Whether each candlestick is 5 minutes, whatever your timeline is. This is a good rule that a lot of people follow. All right, IWM. So I sold at $1.98. It's trading at $1.98. One more leg down on Russell 2000. It's it's weak today, leading the charge down. So most likely, again, well, I don't know where the support. Well, support is here, 172. So it's probably heading toward the 172 level, if I have to guess. Sitting on a 50-day moving average. So you do have a crossover, very bearish signal. It's sitting on a 50-day moving average. I would watch this level. If this level does break, then 172 is the next. So that's Russell 2000. That's been recent trade. And then let's look at QQQ. So that's my exit strategy for Russell 2000. Right now, short-term trades are more important. So I sold it for $2. It's trading at $2.60. So let's try to close it at same thing, $1.50. And $1. So those are my July positions. July, QQQ, July. Close it for $1. Okay. So right now I'm concentrating on June, July positions. So sold it for $2, right? It's trading right now at $2.60. So it's still away, obviously, but for now I'm just putting the orders in. Are you sure they will make a deal for debt ceiling? I'm as sure as you are. I don't know. I don't have any connections to the government. I know I am, everybody, not me, but it doesn't matter what I think, right? It's irrelevant. What relevant is game theory, right? What majority of the people think. I think that majority of the people, more than 50% of people, think that there will be an agreement. And that's all that matters, right? It doesn't matter what my political inclinations are. That doesn't drive the market. What matters is what do the majority of the people think. I think majority of the people clearly think that they will reach an agreement. The question is when, because they're running out of cash by as early as next Thursday, right? So as early as next week, they might not have enough money to pay, employees, pay, some of the, debt that the government has. So, it's a gradual process, right? So the question is, will they reach an agreement this weekend, right? If they don't, then I think the sell-off will accelerate, right? The close agreement, and we actually start, telling federal employees that they shouldn't come to work because they don't have, we can't pay their salaries. Then the sell-off will accelerate. So they will reach an agreement. The question is when, and timing these things is very difficult. Whether you time in the market, you time in the agreement, whatever you try to time is very difficult. Even, I remember trying to estimate how long it will take to do a project, right? Any project. You fix your roof, you do software development, engineering, you have no idea, right? They always say multiply by 2. So you think it's going to take a month to do something, multiply it by 2. So it's the same thing, right? So time in the market is difficult. But looking at the data, looking at the signs that market is overextended or oversold, I mean that does work. Fred, KSS, yes, thank you. How's KSS doing? We have not reached our level. Let's see. I mean, it's stubbornly not pulling back. So it looks like it's trying to stabilize. So you do have a support here. So the position is still, it's getting close. It's getting close. It's trading at 5 cents. All right. Thank you, Fred. In the high. ANF, Scott, same, let's see, is it same behavior? I assume it's same. No, ANF looks better, right? So it never breached the first 5 minutes low, right? I would zoom out now to 15 minutes. And Abercrombie and Fitch looks better, right? But still, I would say this is your support. Like usually I look at the 15-minute candlestick now and this line. So if we drop below 27.70, 60, if we drop below 27.60 again, then you probably don't have a lot of room to the upside. Right? It's going to trade in the range. Would take same position as calls. Yeah, I think calls looks weaker than Abercrombie and Fitch, right? So ANF looks stronger to me, right? Because it never breached, like if you look at the 5-minute chart, right, talking about accelerations and physics, right, it went up and it stayed above this level, 27.60, right? So it never pulled back, where KSS is pretty weak, right? You have initial reaction on the earnings news. There's a press conference, I think, was still going on. So, but then it dropped. So now calls is weak. I mean, it's still up 8%, but it's, you're probably not going to breach this level. I mean, it might bounce back. We'll see, but hard to tell. Victor buying NVIDIA and pullback. I mean, I have NVIDIA and NVIDIA and Broadcom looks similar to me, right? They look similar to me in terms of check price pattern, how much they moved. Just Broadcom, nobody talks about Broadcom on the news, and everybody talks about NVIDIA. So for swing trade, it has to be a short trade, right? This is not a good price pattern in semiconductors. I would want to wait for some signs of stabilization, right? If swing trade, Victor, I don't know how many days, but like this is a free fall, right? So I would wait for some kind of a signs of stabilization, right? You like at least a couple hours where we're not making new lows. If it's a swing trade, I assume you're thinking about a few weeks, few days, then I would wait at least 2 to 3 days of green candlestick. Because right now, SMH doesn't look very healthy to me. I mean, it has this support. I don't know how significant this support. But, I mean, it's approaching 50-day moving average, right? So I would wait at least to see some signs of stabilization around 50-day moving average, right? here we broke below, right? In April, we broke below 50-day moving average. So, you kind of look at these chart patterns like this, like that, right? We're halfway there, right? So either find stabilization here, which it could, right? Because it's overdone. Or if it breaks through this level, then, this is your, buy zone. So this is your one buy zone. I would say 50-day moving average is your second, but I would not try to catch the falling knife, right? I would wait for some kind of a bounce. If you're already in position like I am on Broadcom, well, my thought process is this level, right? 673, right? If we drop below 673, then probably time to exit. VIX is back over 20. I mean, you can see people are nervous, and we're approaching summer, so you're going to have a big swings in these trades, right? VIX is up 10%. On what? McCarthy walked away from negotiations. I mean, it's not a big deal, but as we approach in summer, volatility is going to pick up, right? That was one of our theories, right? And I think the risk is to the downside, right? At this point, the way I'm looking at this, Bob is going to correct me, but I obviously I was wrong on timing, and I thought we're not going to break the year-to-date high. We did, by 1%, not a big deal, right? 1% is not a big deal. So at this point, it's the same thing. Like, I don't think we're going to break 420, right? Obviously, we could go by 1% or even 2%. We could get to 427. Fine, but that's 4% to the upside, right? The best case scenario is 4% to the upside. But to the downside, I think it's just a matter of time to retest at least March lows, right? And December lows, at least. So that's 30 points to the downside, right? So there's more room to the downside than to the upside, right? Significantly more, right? 2 to 1. So risk versus reward doesn't make sense. I'd rather buy at 200-day moving average, right? Because it's not a one-way trade. So if I'm going to do trades, 50-day moving average, usually a good entry point. 200-day moving average may be a good entry point, but at least the risk versus reward is a little bit better. Peter, thank you. Bill, we're at the unusual time. Thank you. Yelen's scheduled to speak within an hour, but she's such a political. All right, Ken, I'm not going to repeat your words. Okay, we'll see. Just remember, very important in trading to be self-aware and realize that it doesn't matter what your opinion is, right? It doesn't really matter what Vlad thinks. And it doesn't really matter what Kevin or John or Bob or Fred. It doesn't really matter. You're trying to predict what majority of the people think, right? If you think majority of the people think that we will not reach a debt ceiling, oh, that's a problem, right? If on time. If you think majority of the people will reach a debt ceiling agreement, okay, then maybe the market is overreacting, right? I mean, we have this kind of big pullback to 50-day moving average. Maybe it's overdone. So just wait for signs of stabilization. For now, I would always look at 1-hour chart and just at least wait. A couple hours, we're not making any new lows, right? For now, we were unable, right? Since May 22nd, it's just kind of every hour low, lower, lower, lower. So wait for some kind of a signs of stabilization, right? This is signs of stabilization, right? I mean, this is signs of stabilization, right? So you want to wait for that pattern, right? The expression is, try not to catch the falling knife, even though you want to, right? We've been in bull market since October. Everybody was saying that we're going to be in bear market. Everybody's wrong. So you kind of conditioned for the past 8 months that we are trading in the bull market, which is accurate, but that doesn't mean it's going to continue like that, right? So if you think bull market will continue, at least wait for signs of stabilization where, candlestick 1, candlestick 2, candlestick 3, we're not going lower, right? Same thing with KSS today, right? KSS was the same thing. Right, kind of physics. You look at the acceleration to the upside, you wait till somebody puts the foot off the accelerator, and then they're changing direction and decelerating, right? So wait 5 minutes, 10 minutes. If we're not going higher, well, then it means we're going lower, right? So that's kind of calls. Why is not my order not getting filled? Okay. Fine. So that's that's that. Thank you. NVIDIA has been best chip for AI, so it should be bullish until tech tanks. Right. Yes. 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 So NVIDIA, I mean, like I said, this is not a good setup. I would not just jump in. One of my rules, better be late to the party than early, right? I hate when I invite somebody at 7 o'clock and they show up at 6:55. Even at 7, I get upset. 7:05, I get upset. They show up at 7:10, a little bit late, but that's okay, So better be a little bit late, give up a little bit of what you think are gained, than be too early and to find out like calls, right? Calls is exaggeration. If I actually did buy the stock, right, I wanted it at 22, well, it's down 10%, right? It's down 10% in a matter of minutes. So I'd rather, maybe instead of 22.89, buy it at 23.10, right? Wait that 15 minutes, be a little bit late to the party than being too early and realize that, now my position is down 10%. FOXL 3 times same scan. I don't trade leveraged ETFs. I trade options, but it's the same idea, right? I mean, whether you buy in KSS or you buy in spiders, it's the same thing, right? The patterns are very similar. It's just calls is a lot more volatile. It's up 20% today, right? Where spiders is down only 1%. So you just do ratio, right? You can't do 100 shares of spiders. I mean, you could do 100 shares of spiders. That's $41,000. You could, so the multiple is, I don't know, on any given day, 1 to 5. So you just buy less total amount, right? If you buy $10,000 worth of spiders, maybe calls you only buy $1,000, right? But then chart patterns are the same. It just happens that, well, today because of the earnings, it just happens at much higher acceleration. Victor, wait for stabilization. Yes. Yes, I mean, I always have that on a slide. It doesn't always make sense. But this rule is very important, and a lot of people follow it, right? Wait, I mean, it says 2 to 3 days, longer term, but shorter term is the same, right? So whatever the candlesticks you're looking for, some people look 1 hour, some people look 15 minutes, some people look 5 minutes, some people look 5 seconds, right? It's all the same, right? Just different time frames. But you want, whatever the time you're used to, look at the chart patterns, you wait for 2 to 3 days or 2 to 3 candlesticks for stabilization. Right? Spiders, for this downtrend to reverse, I want to wait 2 to 3 days of making higher highs and higher lows. Until then, probably the path of least resistance is to continue grinding lower, right? We might, we're at 50-day moving average. That's usually a good support level. But you want to test your theory, right? We are approaching 50-day moving average. And we're approaching the support for rate. 7 out of 10 times it will probably hold. You have again this ABC pattern, right? Probably something along those lines. Hold, rebound. Maybe we reach an agreement. Maybe depending on agreement, we don't know when. But I think this is next, right? I still think we're trading in the bear market. It's just a question how far are we going to rebound. I mean, we could retrace to 420. That's also possible, right? So those are different permutations, right? And probably will be driven by the headline news, right? The longer they can get an agreement, the less likely it's going to bounce and retrace to 420. If they reach an agreement tomorrow, we'll probably be at 420 in a day or two. As Dr. said, who carries the ball and in what direction after you made your bet? Yes. Game theory is very important. It's very important to understand who is doing what and and how much money are they willing to invest. Thank you, Fred. Okay. Any questions? In terms of Okay, so hold on a second. What time is it? 9:18. In terms of positions, let's see, I didn't cover. So we talked about Broadcom. We talked about small cap stocks. We talked about calls, right? NOC is trading so far in the range. Let's just make sure because I have delayed calls. Yeah, NOC is actually up. So that's a good sign, right? Market is down. NOC is not breaking down. Okay, that's usually a good sign. So for now, we're waiting on NOC. We talked about QQQ, right? Mostly bearish positions. So I'm trying to close July. June is probably going to be a losing trade unless, they don't reach an agreement. Then, we'll get to that pretty quickly to these levels. SH, if you're uncomfortable trading options, a lot of you are not. One way to hedge is buying SH. I think that will work well. Buying silver, stronger dollar, so it's in trouble for now. But I still think it's just a matter of time to break through 52-week high. So if you think recession is imminent, it's just a matter of time, then silver is it's a good trade. If you don't think we're going to have a recession and dollar is going to, continue to rally, well, yeah, silver is not going to do well. TAP, we talked about TAP, we talked about TLT, and finally XLF. XLF, small caps, I think, are the weakest link, right? You can actually see XLF as, in free fall. Pretty bearish, retesting, key support. So XLF is, very sensitive to interest rate, very sensitive to debt ceiling. I would watch the support level. If we break through the support level, then we're heading to 31. Any other questions? All right. Thank you on Discord. Thank you on YouTube, right? So please, if you haven't subscribed yet and you're watching this, please hit on subscribe, right? If you like the video, if you think this content is useful and it makes you a better trader, you have at least one aha moment, please share it on social media, right? Do me a favor. It helps us with our marketing effort. It helps people with their trading. Everybody wins, right? It shouldn't be any losing. So please click on subscribe if you haven't done that, or if you like this video or any other videos, copy the link and share it on social media. And we do have commissions, right? If you're an option trader, right? If you are an option trader, I would encourage you to look at your monthly statement and calculate how many trades you do and how much money you spend on commissions. If you're spending more than $10 a month, this is the opportunity to only spend $10 a month, right? So if you're spending $100 a month, $50 a month, just multiply that by 12, and you know how much money you're going to be saving a year, and which could be significant, right? A lot of you are actually active traders, so consider TradeYear.com as a broker-dealer. It's US-based, very reputable company, just like any other. They're regulated, so this is an opportunity to save. Faust, thank you. Have a great day. Yes, I am still promoting Ukrainian charity. Thank you for asking. It's kind of been not on the news, but gate.org. I'm still on the board. We raised over $300,000 so far. So this is a little bit outdated. We need to fix it, but over $300,000 we were raised. So thank you very much, Bob, for asking. We do have the tank. We still have few pieces left. So if you want to buy this memorabilia, right, piece of Russian tank was cut off. Again, $100 per family. This I think costs $250. You can help 3 Ukrainian families. And situation is not getting, better, right? From humanitarian point of view. From humanitarian point of view, it's still, people don't have water in a lot of places. They don't have food in a lot of places. And by the time humanitarian help comes into some of these villages or smaller cities, it takes very long time, sometimes never. This is your money goes to a specific family directly, right away, right? So you can find testimonials, you can find videos here, people who are looking for raising money and the thank you note. So you'll get a personal thank you note because you can actually pick a specific family. All right. So gate.org, thank you for reminding. Ricardo, if you live in Mexico, can you have an account? In Tradier? That I'm not sure. You would have to contact them. I'm not sure. Probably not, if I have to guess, but I could be wrong. Thank you, Ricardo. All right, guys. Thank you very much. Thank you for your support for gate.org. Please follow us on social media, YouTube. If you want to save on commissions, Tradier.com. And I will see you tomorrow morning. Thank you. Tradier, right? So here. And you can open up an account. You can open up an account and they'll get back to you and tell you, sometimes you can live in Mexico, but if you have physical address in the United States, then that could be enough for them to open an account. I just don't know. I don't know. But, you can sign up and, the worst thing they'll say, sorry, we don't support. But they'll ask you for if you do have physical. So yeah, Tradier.com. I'll paste it here. All right, guys. Thank you very much. Have a great day. You're awesome. Thank you. And I'll see you tomorrow morning.